Alright everyone, Cowboy Trades here, back with another update on Bitcoin and the stock market. So I didn't think I'd be making a video today, but Bitcoin shot all the way back up to 20,000, the point of control on our volume profiles, and also the top of this triangle pattern that we talked about in our previous video, surviving the Bitcoin bear market. But now Bitcoin's pushed above 21,000 and we've started to break out of this triangle pattern. Is this the start of a new Bitcoin bull market, or is this simply another bull trap like we've had many times before? Let's talk about it. Well, like I've been saying in my most recent YouTube videos, if we do pump this month, it is going to be because of a better than expected October earnings season. And if we do come over to the SP500 chart, this specific chart, we've got two SPX charts. This is overlaid from January 1st to January 1st. So we're not interested in looking at things peak to peak and looking at the ebbs and flows. What we're interested with this chart, as we've overlaid this from start of January to the start of January, is we're interested in what happened in this October earnings season during the 2008 financial crisis. And as you can see, we also had a better than expected earnings season. We had a very prominent rally, a breakdown, dead cat bounce, forming a lower high, of course, into an M pattern, and then started to break back down to the downside. Now, you can see what's happening now is a little bit more accentuated. We did push down into new lows. We didn't push down into as euphoric new lows as we did back in 2018. And also we had a better earnings season than in 2018, which is why we've started to push back and get some relief from here. Now, you can also see this was also beautifully choreographed in the volatility index for the S&P 500. This similarly lost a lot of volatility. It peaked out at this exact level back in 2018 before having a run down into October. And then obviously we had that final melt up in late November into early December, coming into January. And this was obviously, you know, where the VIX topped out all the way over here, late December time, early January time of the next year. This is when the NASDAQ started to bottom. You got all the tech stocks starting to bottom early to mid-December time. And obviously, as we know, no one's rushing to buy the bottom in the S&P 500, which is why the S&P 500 actually ended up coming down for one final low in March. But let's get back to the point, because like I said, earnings season pushed us up in October of 2008, and this was, like I said, perfectly choreographed in these other charts that we've been looking at. But we've also started off this earnings season very hot. Now, bear in mind, only about 20 to 25% of the total companies in the S&P 500 have actually had their earnings report yet. But out of these companies, 70% of them have reported revenues that are approximately 1.3% above the estimates. And although a lot of tech stocks are leaving much to be desired, you know, your Googles, your Microsofts, they are having poor earnings reports. This is of course causing the NASDAQ and the NASDAQ futures to lose basically most of their gains, down about 2.5% since these earnings have come out. Now, in terms of news concerning financial conditions, nothing's really changed from what we already know. A few weeks ago, we reported on this. The retail sales were down. Yesterday as well, we had the US consumer confidence report, and surprise, surprise, it was down bad, almost 4% lower than it was actually forecast. And if we do zoom out on this, coming over to the 5-year, you can see that the current consumer confidence is around about 102.5, which is not too far from the 85.7%, which was registered just after the massive pandemic scare. So we're really not too far away from these pandemic levels. Yesterday, we also had a US 2-year note auction, and surprise, surprise, this bursted up to almost 4.5%. Now, bonds as well, the US 2-year bonds, they are holding up very nicely, holding on to basically these auction levels that came in on the 2-year notes. Now, if we do zoom out again, like I said, the more these bonds go up, the more government debt, owning government debt becomes more profitable. This, of course, means that we are in a risk-off scenario for the markets. And heading over to Europe, we've also got the Bank of England looking to raise the interest rates by another 75 basis points. This is basically going to mean that we're going to move all the way up to 3%, and we're currently residing at 2.25%. And yeah, this next bank rate change will take place on the 3rd of November 2022 in approximately 8 days. So yeah, in terms of financial conditions, literally nothing's changed. Like I said, the only reason I believe this rally is happening is due to that better than expected earnings season. and of course this nonsense hopes that the Fed is going to pivot, even though literally every single Fed official has been shooting down these hopes for months now. So let's now dive into the charts and see what's going on. Like we said at the start of this video, looking at the 2008 SPX fractal from January 1st to January 1st, it is following along with a good earnings season. However, you can definitely imagine this is a massive divergence than what was happening over here. But speaking of divergences, there was no divergence if we're looking at our original 2008 SPX fractal. Now, if you're a veteran of the channel, you'll remember we were able to perfectly call the top all the way back over here due to this, and I said in my previous videos how I believe we have about another week of downwards movement before we expect this bounce. As you can see, this happened right on par to when the 2008 SPX fractal was calling for. So as we are still following with this 2008 SPX fractal, this has predicted the ebbs and flows in the market so well. Let's look at what it's actually calling for this bounce, because like I said, you know, this was calling for this bounce months and months ago. We've copied and pasted this chart, and this has been the exact same since, you know, August time. So we were talking about this extensively over in August, and it was predicting this bounce round about this time all the way back then. So what it's currently predicting at this moment in time is that we do have further continuation for at least the next 13 days or so. Now, bear in mind, this is not going to tell us the exact price that it's going to top out at. Just like this didn't tell us the exact price that we're going to top out at. This one definitely didn't tell us where we were going to bottom. It just tells you on approximately this date, this is where we can expect to top out on. Now, if we go over to the EMA ribbons, you can see we're pushing up above the daily. If we head over to the weekly, you can see we do have some resistance coming in for these round about the 4,060 in the next couple of days. In the next week, you can imagine the weekly EMA ribbons are going to taper down as we are miles beneath this. So we could see something like this, just a hypothetical, where we do push up. In the next 13 days, we push up to about 4,000 for the SPX. Then we start to break down. We start chopping around for the next 34 days, which is approximately from where we are now down to where we're expected to break down next. So once again, if we're going on with this, we should be rallying for about another 9 days. We could potentially push up to about 4,000 from where we are at this moment in time. That would entail about another further 4.5% run up for the SPX, and this would only entail about another 3.5% move from where we topped out yesterday. So not too far-fetched. Like I said, I'm personally sitting on the sidelines right now. I wasn't shorting while we were moving up. I am literally waiting for that next position of strength to show itself, and if we do potentially continue with this run up throughout the next couple of days, if, like I said, we do head over to the weekly time frame and we do come up to this 4,000 area, that would be a beautiful reversion to the mean that I could definitely consider shorting from. I do also want to be waiting for this next FOMC meeting to blow over. This is going to be taking place in the next 7 days, and as we said, because of this hope of the hope of this Fed rate hikes, it's basically confirmed we're already getting a 75 basis point increase for this month. This is already being priced in. What we're now, or what the markets are now looking to price in while we're pushing up to the upside, is they're pricing in that the Fed should be pivoting in November, which I think is nonsense. So I do think after this FOMC meeting, this would beautifully line up. We could rally for like another 13 days, maybe another 10 days. Like I've previously said on this channel, we normally rally a bit after these FOMC meetings anyway, before breaking down. So this could beautifully line up. You know, we push up for the next couple of days. We have our next FOMC meeting, 75 basis points. Maybe we chop to the side. Maybe we push up a little bit further to round about 4,000. If we do push up to this level, I will definitely be shorting. I would like to see a little bit of chop to the side before potentially entering that short, and then, like I said, within the next month or so, we should be expecting that breakdown. And also, this is really interesting because all of these charts seem to really line up. Over on the SPX here, the fractal that has perfectly predicted this bounce better than myself has also called that we should be breaking down into round about November, December time. And what do some of these other charts tell us? Well, if we come over to this other 2008 SPX fractal, you can similarly see after earnings season we should start breaking down into November. If we come over to the VIX, this bounce is going to take place round about late November, early December time. This melt up for the volatility should also, of course, correlate to that meltdown for the Nasdaq. When is the Nasdaq predicted to continue with this meltdown? Round about in the next few weeks, November time, and it really starts to break down end of November. So it's really interesting to see how literally all of these charts are in high agreement at this moment in time. So I do definitely think in the immediate short term, for the next week or so, we can definitely get continuation. Does that mean I'm longing right now? No, I believe like 80%, 75%, if not maybe 90, 95% of the move has already happened. I do think it's likely we push up to round about 3,900 at least, round about maybe 4,000 potentially before rolling back down. And also, like I said, I stick with what I said in my previous YouTube video, which was that this breakout in the lower time frames is cause for concern if you are shorting right now, which is why, of course, like I said in the last video, I'm not shorting. I'm looking for that next position of strength. Now, when we are looking at this triangle pattern, we're looking at this on the daily time frame on a linear scale. If we do head over to the logarithmics, you can see we actually have to adjust the trend line slightly, and this was the second triangle pattern that we were talking about. And today, you can also see that we have broken out of this again, which, like I say, as you can imagine, this would be cause for concern if you are in a short right now, or if you're bearish in the immediate short term. I'm still bearish in the higher time frames, do not get it twisted. You can see we've had many of these fake outs. Normally these straight runs to the upside, they have euphoria for a couple of days, we get that volume come in, and as soon as you don't have volume backing up the uptrend, you start to get kicked back down to the downside. Now, once again, like I said, I did foresee us pushing up to 20,000. I did also say in that video we can push up to 21,000 if we do have this FOMC out of the way. Now, like I said, for multiple reasons, I am sitting on the sidelines right now, and also if we do pull up the volume right now, volume's really not looking too impressive right now. So there are definitely signals to be cautious of if you are a bull or a bear. Like I said in the last video, for me, nothing's changed. This is really a no trade zone for me. This is why I'm hoping when we do look at Bitcoin, we have a healthy reversion to the mean, and this plays out in the SPX as well. And if we do roll over in coordination with this 2008 SPX fractal as well, this is really when I would be opening my next Bitcoin short. But let's move on from there. I do also want to talk about something interesting that I have noticed with the 2008 SPX chart. Now, this is not fractal, this is just what's playing out now, and it's the regular ebbs and flows that we have in the markets. If we look at this macro low down to this next macro low before a bounce, you can see this took place in about 85 days. If we take out the next one, you can see this took about 112 days before the next dead cat bounce. If we look at this one, this took 119 days until at least what I perceive as this to be the next dead cat bounce. Now, if we look at the top as well, you can see the ebbs and flows are very similar. 84 at the top, and if we drag this one out, you can see this one was a lot longer, 140 days. If we take a weighted average of these two, so 84 days, 140 days. If we get out the calculator, 140 plus 84. This is also something super interesting I noticed. Take a weighted average of these, about 112 days. Where are we going to be approximately if we continue this for about another 112 days? Well, we're going to be around about 4,100. This is a little bit higher than my other chart where it was kind of predicting we top out around about 4,000. We could have a wick. We don't actually necessarily need to make it all the way up to the top of this, but this would also be interesting if we continue with this, rally up to 4,000. Let me just say it's 4,000. I personally don't think we really go higher than that. I think there's going to be major resistance there, but let's say we go up to 4,000. That would be about another 112-day spread, which is the weighted average of these two, and also, you know, the most kind of common answer when you are looking at these. Now, it could be very likely at this point that we break down for another 80 days, another 100 days or so. Let's just say we break down for another 80 days. This would bring us into that Q1 bottom that I've been talking about that I think is going to take place. Now, I've previously said I either think we bottom late December, as in, you know, mid-December time, late December time. Since I have said these predictions, obviously we've bounced pretty hard in the stock market, so I do think we need more room to the downside to actually price in more of this bearish news in the market. So I do think, once again, like I said in my previous videos, we bottom round about Q1, and this could beautifully line up with all the ebbs and flows that we've been talking about from before. So if we move on from here, you can also see very similar thing happening in the Dow Jones. What is also interesting, you look at the SPX. SPX is almost up to the top of the channel, insinuating that this breakdown might almost be done. If you head over to the Dow Jones, we're basically right at the top of this channel, insinuating the breakup might already be done. Now, when you go over to Bitcoin, Bitcoin is showing extreme weakness right now. I mean, we're really just lollygagging at where we've previously made these lows. I mean, as you can see on the weekly time frame, lows were consolidated around about 21,200 down to about that 18,000 or 17,600 that we talked about, and we're at these exact same levels. We're really not bouncing up too high. So when we go over to the first chart that I wanted to talk about, when we look at the earnings season and when we see tech stocks, you know, the NASDAQ futures breaking down, this is interesting to see that when we look at what's going on with the more tech stocks over here. So you've got Bitcoin, which is obviously not a stock, but then you've got the NASDAQ. So I'm lumping these in together because they are obviously new technology. And what you see with this is, zooming in, what's happening right now is Bitcoin is being super flat, super choppy, super mundane. As you've probably seen headlines before, you know, the DJI, which is the Dow Jones Industrial, and the SPX, they're more volatile than Bitcoin right now. So when we look at Bitcoin, you know, this bounce is really pathetic. When we look at the NASDAQ, because of the negative earnings season in some of the tech stocks specifically, obviously other things in the SPX are doing well, but, you know, looking at tech stocks like Google, Microsoft, not all of them are doing as well as your Teslas. So this has started to break down for the NASDAQ, and we're kind of right on par with where Bitcoin is. Now, when we look at the SPX and the DJI, once again, the SP 500 and the Dow Jones, you can see these are having these massive runs up to the upside, and they're already, if I can find these charts, they're already basically at the top of these channels. Now, basically, as we know, the SPX has basically been leading everything that Bitcoin's been doing up until this time. So I do think there is more credence in, like I've said, the opinion that I've stated, maybe that we don't go for this far, maybe we don't bounce for another month, maybe we only bounce for another week or so, but I do see a tiny bit more continuation, at least for the next week, maybe the next 2 weeks, before we do hit round about this 3,900, 4,000 level. And then I do think all of these charts, whether you're looking at the SPX, whether you're looking at the Dow Jones, whether you're looking at Bitcoin, you know, for example, Bitcoin could come up to these EMA ribbons on the weekly, potentially a 22,000, 22,500 range before breaking back down. I really wouldn't be expecting that we can push up to that high. Is it a possibility? It definitely is. Over here, multiple times you can see we didn't quite make it up to here. So can we push up to 21,000, 21,500 before breaking down? It is very likely. It is very possible, which, once again, like I've been saying in my previous videos, these are the causes for concern on why I would be sitting on the sidelines waiting for this next reversion to the mean. If we do push up to some of these price targets, 21.5, 22, 22.7, I will be very happy to short that next reversion to the mean. Like I said, we're not looking to get every single short. We're definitely not looking to get every single trade, because that would be insinuated I'd be longing, even though longing is very risky. I'm very picky with these trades. I'm happy to sit on the sidelines while the late bears get wrecked. And obviously, the late bulls that are running into this uptrend right now, you can imagine they're going to be wrecked very soon. So sideline hunters, we're just waiting for that next trade. That's really all I see. If we wrap up the video on the final charts, I do also want to talk about what is known as a bump and run pattern, but this is more of a bump and bump pattern that's happening at this moment in time. Now, a bump and run is typically, if I line it up like this, you'd be able to see, you know, the DXY is having higher lows, higher highs, and then we get this bump, we go up on a higher trend line. We've got this higher high, so this is the bump up, and then the run is normally when you start running back down. But this is just a bump and bump pattern. As far as I can see, we're constantly making, you know, new trend lines where we're just trending slightly higher than before. I do also see, we don't particularly need to pull up the EMA ribbons for this. If we pull up the EMA ribbons, you can see a slightly different story. We come down to the EMA ribbons and push higher. If we're just looking at the most brutal breakdowns that we've had on the DXY, what I've also noticed, which is super interesting, is, let's say, for example, you've got this breakdown here and this breakdown here, and while you were at this level, you were kind of consolidating beneath this resistance. Now, you broke above it and you had two further corrections, and what's interesting about these corrections is they were making higher lows above this region over here. Now, if we copy and paste this, let's look at this market scenario. As you can see over here, we were getting stuck here and here for these corrections, and then we broke above it, we came back down and back tested it as support, and we kept on pushing higher. As you can see over here, we ran into here, this was resistance, we broke back down, we broke back up, and when we were retesting this zone, once again, we never went lower than the previous correction. If we do this again, keep on going up until where we are at this moment in time, you can see there was resistance over here, up until down here. If I mark it, so you've got the resistance here, you've got resistance here. You can see resistance broke down, you push back above it, and you retested it from a higher level. Let's do it a few more times. Really not too much to go now. As you can see here, this was resistance. This was a breakdown over here. This was a breakdown over here from this resistance point and this resistance point. You push back above it, and right now, as you can see, the lower level, the lower bound on this retrace was around about 109.42. This is where you initially got rejected, and we're currently residing around about 110.2. So for the DXY, can we push down a tiny bit further, 109.4, 109.5, before rocketing back up and probably retracing this area as resistance? And, you know, once again, a similar market scenario will happen in both of these levels. I definitely think this is what's in place. So like I said, whether you're looking at the EMA ribbons, you're making, you know, higher lows, higher highs on this, whether you're looking at this bump and run pattern where you're looking at the trend lines and they keep on getting higher and higher and higher. Now, when we do start breaking down from these trend lines, well, if we do start breaking down from like 109.2, that's going to be a completely different story. But for right now, all I see is this bump and run pattern. I see the EMA ribbons very, very healthy. You know, we're miles above even the short-term moving average at 108.5. So really, DXY bump and run, if you're wondering what this, or more like bump and bump and bump until eventually we probably run. But down all the way up here, rather, you can see 120. I've got a magnet now. If we zoom out, you can see this is the 2001 DXY highs. And like I said, I do think this 120 range is going to be a magnet. If we do flip above this, you know, some crazy market news has to happen for this to be in play. But either way, even in the most bearish scenario, I do see us at least coming up to 120, potentially getting rejected, and then that could be the bear market. That could be the, well, bull market top for the DXY, bear market top if you're thinking of anything else. But nonetheless, I do see DXY pushing up to this 120 level, 121 approximately, before anything else happens. I do also want to wrap up this video talking about the markets in the higher time frames in the context of a liquidity grab. So if we come over to the fixed volume profiles, you can really see the most amount of volume traded, you know, bar the data that was traded all the way down here in the 2018-2019 bear market. We're simply kind of looking at from when we've broken into this new cycle roundabout here. The most amount of volume traded was right around just beneath this 1 trillion level. As you can imagine, a lot of liquidity was required to push us up into that 1 trillion level. We broke back down, retested it a few times. We spent time round over here. We spent many weeks trading around these levels. So subsequently, as you can imagine, the most amount of volume was traded around about that 950 billion to 1 trillion level. So it's no surprise if we do zoom in that you can see, you know, we've broken beneath this liquidity level. We didn't have enough liquidity. We didn't have enough bearish news. We didn't have enough bearish momentum to push us down into these new cycle lows yet. So in my opinion, this is a liquidity grab. We're grabbing that liquidity. People are going to be exit liquidity in this. People are also probably going to use this opportunity to, you know, DCA out of some of their holdings that they wish they sold at some of these lower levels. So at least in my opinion, this is what I think is going on in the context of liquidity grab. We've run right into the volume profiles on our total crypto market cap. So looking at the total cryptocurrency market cap as a whole. Now, if we do come over to the total crypto market cap, excluding Bitcoin, also known as the altcoin market cap, you can similarly see, I'll mark this in green, this green box right here was where all the liquidity was around about 584 billion. And as you can see, we really actually haven't come up to this area. So this is showing that, you know, altcoins right now are actually showing some very big weakness against Bitcoin right now. And this makes sense. A lot of the altcoins that I've been looking at, if I can find a better chart for Cadena for this, a lot of the altcoins that I've been looking at have been breaking down a lot more than other people have been anticipating. You know, the general market sentiment was that altcoins were holding on much better than Bitcoin, and you know that altcoins were going to bottom a lot earlier than Bitcoin. I obviously have told you that that is absolute nonsense and that's not going to happen. You can see, you know, your Solanas are breaking down. Ethereum's holding up quite well. Cadena actually broke down to about 112 on this chart. You know, in the past day or so, we've come down to about 120. So a lot of these altcoins have already started breaking down into new cycle lows, and they're looking very, very weak in comparison to Bitcoin. But then when you're looking at the markets as a whole, we know that tech stocks, Bitcoin, the total cryptocurrency market cap, the altcoin market cap is really underperforming against this SPX Dow Jones kind of bounces. So in my opinion, as soon as the SPX, as soon as the Dow Jones, as soon as the Nasdaq really start to break down, that is when we can keep our eyes out for that next Bitcoin short. At this moment in time, I still do stand with exactly what I said in my previous video. If you go over to surviving the Bitcoin bear market, I told you there were a few reasons for concern, being, you know, this chart over here and this chart over here now that has just started to break out over today. I keep that exact same energy. I do think if you are a bull at this moment in time, you might be a late bull. You're probably running into this a little bit late if you're longing at this moment in time. And I also do think, you know, for example, if you're a bear, maybe right now is not the perfect time to short, which is what I said in last video. I really want to see this FOMC date out of the window. I want to see the SPX potentially push up a little bit higher, roundabout to this 4,000 region, and then I really think we're going to start rolling down in accordance to this 2008 SPX fractal. So once again, just a quick reminder, I think we bounce for about another 2 weeks on the SPX, which means, you know, Bitcoin, tech stocks, the cryptocurrency market as a whole can bounce for the next couple of weeks. But then I think in the next month or so, leading into late November, early December time, I think that is when we start rocketing to new lower levels. So that's really all I've got for you today. Also, once again, nothing to update in terms of the smart money. I'm going to be very malleable as soon as smart money starts picking up and buying into these markets. I'm happy to buy when smart money is, but for right now, smart money is not accumulating. Retail money is accumulating. That's how we know that this rally is purely retail driven. And looking at, you know, very simple metrics like the volume is extremely weak right now. And once again, this chart kind of says it all. When you're comparing Bitcoin against other, you know, stock market indices like the Dow Jones, or when you're looking at SP 500 futures, when you're looking at the Nasdaq, Bitcoin's really underperforming a lot of these. So I think we turn around very, very soon. I don't think Bitcoin has too much higher to go up right now. But like I said, for these reasons that I've highlighted, there are a couple of causes for concerns on why I wouldn't be shorting specifically for the next week or so. After the next week or so, if Bitcoin pushes up to around about that 21.7 level that we talked about, maybe even a little bit higher, depending on how high the SPX manages to push up, I will be letting you know when the next short will be coming into play. For right now, I'm on the sidelines watching this whole thing take place. So that's all I've got for you today, cowboys. As always, if you do enjoy the content, help me get these videos trending. Make sure to like, turn notifications on, leave a comment down below, come and join the Discord. Like I said in the previous videos, I am going to be starting to share some more exclusive trades over on the Discord. I've had about 40% profit on our most recent trades over on the Discord, so come and join those. If you do want to come and join, click on my channel, click on the About section. You can see my Twitter, Discord, Instagram, and merch page is linked over here. So hope to see you over there. Twitter at 618_cowboy. Come and join the crew. As always, my friends, cowboy out. Peace.